This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, a little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this information, all Bitcoin, all the time. I'm your host, Christine Lee, taking a look at Bitcoin for a live look. The CoinDesk Bitcoin price XBX index is currently trading at $39,117. Bitcoin slightly down just about 1% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
So Bitcoin held on exchanges is now decreasing after increasing when BTC price initially dropped in May. Philip Gradwell, chief economist at Chainalysis, tweeting out this chart saying the outflows is greater on exchanges that primarily trade crypto-only pairs compared to those with fiat markets, suggesting a shift in where people prefer to trade. Gradwell continues that the recent declines are an upper bound as exchanges move Bitcoin in preparation for withdrawal, not all of which will be withdrawn. However, this data does exclude recent internal movements of Bitcoin to cold wallets. Since Monday, July 26th, about 4% of BTC has come off exchanges, according to Coinmetrics data, which is roughly 65,000 Bitcoins or $2.5 billion. Joining me now to discuss BTC price and other Bitcoin news is our Week in Review panel, CoinDesk Managing Editor of Markets, Brad Keoun in Austin, and George Kaloudis, Research Analyst in New York. Welcome to the show, George and Brad.
Hey, Christine.
Thanks, Christine.
Good to have you on. All right. So, George, I know you've taken a look at that chart. Bitcoin held on exchanges decreasing. What do you make of this? I'd love to hear your analysis on the matter.
Yeah. So, of course, it really depends on who you ask, right? And this drop in this number, there was a similar drop that happened, maybe a little bit smaller, back in April 15th. And everyone knows that April 15th was the day of the Bitcoin all-time high when we were above 60,000. And of course, that followed a precipitous drop in price. But I would also say that the last time there was a drop that was this big was really in late October, early November. And from that, really nothing happened to price. And I think the chart from Chainalysis makes a really good point where the crypto to crypto exchanges are seeing bigger drops in BTC leaving versus the crypto to fiat exchanges. There might be some suggestion there that there are newer entrants into the market who are just more comfortable with a crypto to fiat exchange versus, moving things across different crypto assets. I would also say that when I see big outflows like this, the first thing I think about is that traders, they like the price, right? They're quote unquote willing to hold for a longer period of time. They're not ready to just jump in and out of the asset. So it might not indicate that the local bottom is in necessarily, but it certainly shows that investors are more willing to weather the storm in the near term, given the friction of just moving funds, back on exchange to liquidate if they can do that.
What I find interesting is that crypto to crypto pairs, they're seeing more of a difference. And I wonder if that's because of any discomfort with Tether or stable coins. And so they're more comfortable with going to fiat to crypto exchanges.
I'd say that's totally possible. As this week we saw, there was a DOJ probe into Tether and into, what is backing Tether? This has been a conversation now for, it feels like, I don't know, forever, for as long as I've paid attention to Bitcoin. And Tether is a really, really, really important part of the exchange infrastructure. It provides a lot of liquidity. Over 50% of trades in and out of Bitcoin happen with USDT, Tether. To that, it's kind of a, not a good series of events for Tether right now because, they have the DOJ probe and their biggest competitor, USDC, is kind of on this uphill climb of like, hey, look at us, we're doing great. They're talking about going public. And Circle, who issues USDC, is talking about going public. And they're seen as more the legitimate cousin to Tether. So it's kind of an interesting storm for Tether these days.
Well, we're continuing to monitor those developments for sure. Brad, at the same time, We're seeing a pop in Bitcoin, a 9-day rally straight. I'm not sure that it's going to be able to pull off a 10-day rally the way things are looking right now, but still very significant after that short squeeze we saw over the weekend that possibly was the catalyst in the bounce that we're seeing in Bitcoin to this day. But yet we are still range bound. We've been seeing Bitcoin try to test that $40,000 resistance and not able to really break away from that. So are we still range bound?
Kind of looks like that, Christine. I mean, to your point, we've just been on one of those, incredible periods, and that comes and goes in Bitcoin market where just all of a sudden it takes off, and sometimes it'll go up $10,000 in a day, but this time, it was $10,000 increase from 30,000 to about 40,000 over, as you said, the 9 days, but it was a steady increase, and a little bit every day, but yeah, as soon as we hit 40,000, it stalled out. And the technical analysis shows that it appears to be pretty solid resistance, and reading kind of what the analysts are saying at this point, it looks like, it's still pretty challenged around 40,000, 42,000. And then, if we go back down, it looks like we have a really solid support at around 30,000. So yeah, I mean, at this point, I think probably so. We're still in this kind of $30,000 to $40,000 range that we've been in for the past couple months.
And Brad, part of the reason that we may be seeing a bit of a drop off today is the options expiry. Deribit, the world's largest crypto options exchange by volume and open interest, settled monthly options contracts worth $1.6 billion. Correct? So is that just a temporary dip, or I'd love to hear you say there will be a catalyst for some sort of direction, some sort of movement next week. And we did see that with the short squeeze. So.
Well, let's see. The options expiry is something that happens once a month, and what we've seen over the past several months as the crypto options market has continued to get bigger and bigger is that you have these strike prices, and traders kind of are looking at those strike prices, and there is anticipation that there may be some effort to kind of push the market around just before the expiry. So those options might expire in the money, or in some cases out of the money. But a lot of times people will just not do anything until that option expiry comes, and then they'll trade. And what we've seen in the past several months is that prices went up after the options expiry. Today, we saw it go down. So, I mean, it's hard to tell whether it was due to the expiry or whether the market was just kind of waiting until after the market expiry to do what it was going to do anyway. We've been up for 9 days, so it's not super surprising we would lose some altitude here.
All right, moving on to other news this week. We had a trio of crypto hearings in DC, a lot of lawmakers having Bitcoin at the tip of their tongues, but not in a good way. Some of the words being thrown about was phony populism, shady coders, a lot of fear, uncertainty, and doubt in DC and the Capitol regarding cryptocurrencies and stablecoins. And I wonder, George, do you think that is having a chilling effect on crypto?
I'd say so, to a certain degree. The people who are already bought in and who know about Bitcoin are already invested and have their thesis built out, they're not necessarily scared of the fact that Senator Brown from Ohio called it what did he call it? A phony populist marketing scheme, or Senator Warren, labeled us all the Bitcoin supporters as shady super coders. Mind you, not most of us code very much, but to people who are on the outside looking in, they're sort of on the fence with, okay, do we want to start putting, treasury assets into Bitcoin, or do I want to put whatever, $10,000 of my money into this, it gives pause, right? These are one's, Senator Brown of Ohio, but one is Elizabeth Warren, who's seen as this progressive figurehead in our government. And if Bitcoin is supposed to be this great thing that empowers economic empowerment, then why wouldn't Elizabeth Warren be all over it? I think it's going to give people a little bit of pause. What I would say, it also points to that there's going to be a very long uphill battle for people who are in the space, who know what this can do for people, and educating our senators and our representatives and our government officials on, hey, this could actually help people. Now, their grip on, the fiat monetary system is probably going to give them a little bit of pause in accepting Bitcoin, but it's not immediately just hey, everyone in Bitcoin is, it's not a Ponzi scheme, and it's we're certainly not all shadowy supercoders trying to steal money from everybody. So.
It almost seems like a pattern. Every time that Bitcoin moons, skyrockets, has a huge rally, and then subsequently crashes, we hear the regulatory drumbeat. And we're hearing a lot of regulators around the world crack down on Binance. There's a word about regulating or further figuring out a better regulatory framework for cryptocurrencies and crypto exchanges. And so in the midst of that, FTX and Binance are making several moves, and one of them being they are deleveraging. So they're going from 100 times leverage to 20 times leverage. And Brad, I wonder, what will the impact of this be on the crypto markets?
Well, there's a lot of speculation about that, but generally speaking, people seem to think this is a positive for the Bitcoin market and crypto markets in general. A lot of people love to take the leverage, and, you can make fast profits, but also get wrecked super fast. But for everybody else, probably who are not taking quite as much leverage, what happens is when people get super leveraged, then the price moves a tiny little bit, they get a margin call, and then their positions get liquidated. And as that happens, that causes a lot of extra volatility in the market. And so people are saying, if there's less volatility due to less leverage, then that actually might make some potential newbie investors or people who are kicking the tires on Bitcoin feel a little more comfortable about getting in, because there won't be such crazy volatility.
Mm-hmm. Also, the Fed this week announced that they are keeping interest rates near zero, and Fed Chair Jerome Powell said that inflation is transitory despite rising consumer prices. How are the markets interpreting those comments in the crypto markets, Brad?
Well, just to start with how they're being interpreted in traditional markets and kind of traditional economists, there really wasn't much of a change at the meeting this week. He had said at the prior meeting that was the meeting where they were beginning to thinking about tapering their $120 billion a month of asset purchases. And this meeting, he basically confirmed they're thinking about it, and kind of the on the street view is over the next few months, they have the Jackson Hole Symposium next month. But that's not an actual Fed meeting, so they won't make any decisions there. But it could be after that, the next meeting where, they really get serious, or maybe the next couple meetings where they announce a plan to taper, and then it's after that. And so, generally speaking, it's kind of, for crypto, it's sort of wasn't much of a story. I think prices actually did go up a little bit right after the decision in that hour and during the press conference that Chair Powell gave, and possibly just a sign that people saw it as a somewhat dovish meeting in the sense that there weren't any hawkish surprises.
Yeah, let's take a look at next week. So there's a lot of talk about the bipartisan infrastructure bill that is being discussed in the House and Senate and how it affects crypto investors. Ostensibly, this bill is meant to help with infrastructure trains in the country, but part of how they're going to raise that money is to $28 million from crypto investors. And so there are going to be elevated reporting requirements and even potentially regulations on, or rather rules around stablecoins. George, tell me a bit about what you're looking forward to on this.
Yeah, sort of similar to what I was saying earlier about this regulatory friction. We don't know exactly what's going to happen at the end of when this bill is put into law or what have you. But the more that we add friction layers to the crypto markets and to Bitcoin markets and to people who are potentially thinking about starting businesses within these type of industries, it's going to automatically put us a little bit behind in terms of, technological innovation, right? We've seen this time and time again with if regulation stifles technological growth, then there's just going to be a little bit of a falling behind potentially in our economy. So I hope that the people in the position to speak with these people would want to say that, hey, we probably shouldn't tax people so heavily or increase regulatory requirements to the point where it would stifle innovation, right? There is a balance that needs to be struck in order to, push this forward because this is an important industry.
Mm-hmm. All right, we got to wrap up. But Brad, last question. Next week, Bitcoin direction. What are the catalysts?
Let's see. There's nothing in particular that people are looking for. People are just kind of reading the charts. Again, we're sort of in this zone where there's nothing super, on the horizon that's going to move
Brad.
things. It's just, I'm sorry, but yeah, we're stuck around 40,000. People are saying they see resistance at 42,000 right. Support. Yeah,
summer doldrums.
Yes.
All right,
yes.
folks. Well, thank you, Brad. Thank you, George, for coming on. Have a great weekend. That was our CoinDesk Weekend Review panel with Managing Editor of Technology, or rather, Managing Editor of Markets, Brad Keoun, and Director and Research Analyst, George Kaloudis. That's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again on Monday at 3 p.m. Also join me Monday morning at 9 a.m. Eastern for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.